China's supreme leader, Xi Jinping, is freaking out as he's trying to steer his ship away from a total disaster. They're experiencing one of the worst economic downturns in recent history. Unemployment is up among the youth of China. Their aging population is growing thin. Their housing market is decimated, their domestic demand is down, and foreign businesses from all around the US are setting up shop in other countries due to geopolitical risks and tensions. This continued weakness and deceleration in the Chinese economy poses a very serious and likely threat to markets globally, as it's the United States' third largest trade partner behind Canada and Mexico. However, globally, China is one of the largest trade partners to over 120 different nations, and a collapse in their economy will have its ripple effect worldwide. Now, this is important for crypto markets because anyone who's been paying attention over the last decade understands that the greater US economy is closely correlated with the price action of crypto. Both of them are risk on assets. And so if one is going down, typically that means the other is going down. And when one rises, the other rises. We have not truly decoupled in terms of these markets yet. That doesn't mean forever, but right now, if things started selling off bad, then so would crypto. In other words, if China experiences a collapse, the US markets might feel it, and yes, crypto markets would too. That would include Bitcoin, Ethereum, and of course, XRP. So in this video, we'll be discussing what's really going on in China and how those factors will play into the global economy, crypto, and affect the price of XRP. Then closer to the end of the video, I'll share some information on how imminent this threat is and some likely scenarios into the end of 2024, so you can feel confident and comfortable moving forward at the end of this video. If you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. Hello and welcome back to the channel. My name is Paul, and I really want to preface this video by making a note of the fact that we can't 100% trust all data coming out of China, considering it is a communist dictatorship. And so whatever information we get, it's usually boots on the ground. And yes, it is relatively reliable, but the data that we get, economically from their government never is. That said, typically what these communist leaders do is they kind of push off responsibility, or I would argue blame, onto other nations and leaders. And it's no different in the United States. It's just that that's how communism has always worked. So in this article from the AP, it says China's Xi calls for patience as Communist Party tries to reverse the economic slump. And right here, you can see as the ruling Communist Party tries to reverse a deepening economic slump, and this is what Xi Jinping said. And he said Western countries, so now he's pointing the finger, are increasingly in trouble because of their materialism and spiritual poverty. So we're going through hard times because of something that they did. However, you can't sidestep the actual data, which shows that consumers over in China are gloomy. Private investment is sluggish. A big property firm is near collapse, and that's been happening constantly since Evergrande. Local governments face crippling debt. Youth unemployment has continued to rise. The economic setbacks are eroding Mr. Xi's image of imperious command. So what I want to do is share a little bit of this video, which will help us gather insights into what's happening between China and in particular their global trade relations. Here's a video from Aaron Watson over at YouTube.
Ascended to the world's second largest economy through the greatest 40-year run in economic history. China's GDP grew by more than 9% per year from 1980 to 2019. And during that time, more than 800 million people were lifted out of extreme poverty. But the good times may be coming to an end. The capital that funded China's growth is drying up. The energy that powered its manufacturing is getting more expensive. And the unfettered growth of its real estate market has hit a brick wall. China's economy faces the most ominous challenges since the Great Leap Forward, that resulted in 3 years of famine and tens of millions of deaths. But China's geopolitical rivals should not be celebrated. It is the top trading partner for more than 120 of the world's 195 countries, which means trouble in the Middle Kingdom can and will affect everyone.
So it's no secret that China is a global player, and we've had a lot of trade relations with them over the years. As you can see in terms of the list of countries with the largest GDPs, the US is constantly sitting at number one, at least over the last 70 years. But China really started to rise through the ranks, sitting at number two with $18 trillion GDP forecast, whereas the third largest player is far behind, Germany, at $4.5 trillion. So you can really see the large disparity between the United States and China. And because we are such large players, we did do a lot of global trade over the last couple of decades. But that seems like it's starting to change. Here is how intertwined our economies have been, though. In this article from CFR, they said American companies earn hundreds of billions of dollars annually from sales in China, money they can invest in their US operations. So imagine we're no longer doing the hundreds of billions of dollars over there, right? They're no longer going to have money to invest back in the United States. On the flip side, Chinese companies have invested tens of billions of dollars in the United States, though this investment has dwindled in recent years amid heightened US government scrutiny. For China, the gains from trade with the United States and the rest of the world have been tremendous, and that's what really allowed for them to rise in such a fast fashion. Since 2001, China's economy has grown more than fivefold, adjusted for inflation, and it is now the world's second largest economy, behind only the United States. However, by some measures, it's actually larger. Now, in true communist fashion, Xi likes control, and so he thinks he could potentially fix these issues by asking people to remain patient, pushing or putting the blame on other countries and competitors, and then saying that his party has been making the case that the country's economic challenges are manageable and that new drivers of growth, including electric vehicles and clean energy, are surging ahead. However, the economy continues to slump, and that's actually showing up in their bond market. In this post right here from Interstate Yush, Chinese bond yields gradually dropping to the lowest they've ever been, minus several stock market crashes like 2008 and 2020, after which they almost immediately recovered or had V-shaped recovery bottoms. Pretty significant signal about the true state of the Chinese economy. And here in 4 different charts, you can see that the yields are just consistently hitting new lows. The bond market is screaming that people are running for the hills, ditching their bonds in China, and probably picking up debt in other countries where they feel that the country's less likely to default. In other words, no matter what China is trying to do, this is the central problem of communism. Government control only ever hinders growth. It doesn't actually help it, although this was probably the greatest experiment in history to taking a nation out of complete and total poverty and raising 800 million people up out of poverty. However, they are still directly under the control of a dictator. The old ways for achieving stable growth simply aren't working, Liu Xinjin, a retired senior Chinese government economist, shared. And so nothing the central government is doing right now is really helping the situation, as the central government controls most taxes in China and then transfers most of those funds to local governments, but that falls far short of what many counties, towns, and cities need to meet demands to generate growth and to implement Beijing's policies, pushing local governments to take on debt. So imagine, it looks very similar to the situation in the United States right now. We just continue to print more money or create more debt, right? And it doesn't really ever solve the issues of the fact that we're simply not growing. And we're not growing probably because there's less demand, because consumers don't have as much confidence. They're getting crushed by inflation. It's a very similar story. It's just China looks to be in a weaker situation than the United States. And ultimately, that will have its ripple effect worldwide. So this is terrible news for the Chinese people and China as an economy, which could potentially affect every other market worldwide. This is a symptom of a larger disease. In this post, the Chinese economy is deflating in nominal terms after enormous government stimulus failed to deliver. So imagine in the US, right, when we stimulate the economy through QE or the printing of dollars, the economy really starts to rally, as we witnessed the V-shaped bottom recovery from 2020 to 2021, which also created a lot of high inflation. There is always payback for this and a painful trade-off involved. And as you can see in this chart or image right here, China's economy-wide prices is in a longest decline since 1999 or the dot-com bubble. And that really started right back here in earlier 2024 and has remained in a decline as the broad measure of prices contracts for the fifth straight quarter in Q2 of 2024. So they're in a very tough spot, similar to Jerome Powell and the Fed over here. I would just argue they're in a far weaker spot, considering they are not 100% energy dependent. They're also not independent from a food supply stance. They actually rely on other nations for their food supply, whereas the US is not only or has the ability to be energy independent, but we also can feed all of our own people. We are not reliant on other countries for that. So we are in a very strong spot relative to China. But that doesn't mean that their economy can affect ours. However, without forceful stimulus directed towards boosting spending instead of expanding supply, the risk, economists say, is that China will slip into a damaging period of falling prices and subdued growth, similar to Japan's decades-long stagflation or the painful debt workouts that followed past real estate crisis in Europe and the US. And to make matters worse, a lot of companies from the US, and we're talking big companies, are also moving shop outside of China. China is no good for business, at least not for big tech's IBM, which recently announced that it will shut down its operations in China. The supposed rationale is the current state of the Chinese economy. So IBM joins a growing number of American companies like Black & Decker, Nike, LG, Electronics that are shutting down their Chinese operations and moving to other countries. Then you combine that with the fact that Walmart sold an 8-year-old stake it held in one of China's main e-commerce platforms for $3.6 billion, and IBM closed their research institutes as well. Car makers are even scaling back because Chinese companies now hold nearly 3/5 of the passenger car market. And then one of the biggest players in the world, Apple, had an emphasis on sourcing now product from India and Vietnam, growing after geopolitical tensions and pandemic era lockdowns. So the real question is this terrible for the entire global market and, more importantly, the US market and crypto? I would argue in this there is a silver lining. And that silver lining is the fact that the US, since the 2016 Trump administration, has been moving away from China. And that actually continued to occur under the Biden administration, as President Donald Trump took an even more assertive approach, imposing tariffs on hundreds of billions of dollars worth of Chinese goods. Trump also withdrew from the TPP and negotiated a so-called Phase 1 agreement with China. Meanwhile, at the same time, Congress, responding mainly to fears over Chinese acquisition of U.S. technology, passed legislation expanding the role of CFIUS and tightening controls over high-tech exports. Under President Biden, Washington has taken the most serious steps yet toward weakening China's play for economic dominance. And many of those plays involved the CHIPS and Science Act and the Inflation Reduction Act, which arguably made inflation worse. But a few of the good things that came from it is that both of them were passed in 2022 and directed hundreds of billions of dollars to scientific research and domestic production of high-tech goods, such as semiconductors. And these things that occurred at the governmental level spooked a lot of major players, and also because China became more expensive as they continued to expand and become a dominant player. actually took major players like Apple, like IBM, and they started moving their operations off the shores of China and into other developing nations like Vietnam, like India. And so now not only is China in a weak position, but we've actually moved a lot of our industry away from them. So we're not completely reliant, which is actually kind of a good thing. And so even a company like Google says their very first Pixel phones are going to hit the market in 2024 that were made in India. But as you can see here, here is the S&P 500 in the blue line, and this yellow line is a Chinese index. And so although the Chinese market continues to crumble, the US market relative to China has looked really strong. Now, if they go through a period of major stagflation or they see some sort of an economic collapse, I do believe we are going to feel the ripple effects of that. I do believe it will cause a bit of fear in the US markets, but I do believe we're also a bit more resilient. And at the end of the day, I do believe that Xi Jinping and the Communist Party over there will do anything and everything under the sun to prohibit a collapse from happening, whether that is through more quantitative easing or money printing in their case, or whether it's the fact that they'll simply hide the numbers and that type of news won't make it out to the public until we begin to realize that a lot of folks are traveling over there or maybe aren't allowed to travel over there and are reporting from the ground that people are actually going hungry. That said, because it is such a long time horizon, and since it's uncertain exactly when something like that would happen, I don't believe it's going to affect us anytime in the near future. It could happen sometime in 2025, 2026, but as things stand, I do believe we're still in for an end of the year rally. So let's get into the crypto charts now. So I'm going to pull up the price action on XRP, and I'm going to put it on a weekly time frame. So basically what this is stating is that each one of these candles represents a single week of time. And yes, they do tell stories. The first thing that I want to make a note of or share with you is the fact that we have long, strong wicks to the downside on a weekly time frame in these ranges right here. You can see right here back in August 14th of 2023. Yet again right here on April 8th of 2024, and a third time right here on August 5th of 2024. And on August 5th we experienced the BOJ collapse, if you will. But what this is telling us is that there is a decent amount of demand or buy orders right down here at the bottom of the wick where we consistently saw support, and a small breakdown for a bear trap only to see the price action directionally change to the upside. So what I'm going to do is I'm going to toss a line right there because that seems to be a pretty strong support, and I'll toss it another one right there. I like ranges. I don't typically like a single line. I like a range because it gives us a little bit of leeway and some room to play on the price action. And as you can see here, even on the breakdown in July, the market rallied right up from there. So yes, this is a good long strong range. On the flip side, to the downside, we have a long strong range right here of support, right between 31 to 29 cents. So what this is telling me is that we have we're currently above in the upper half or portion of this range since the lows of May of 2022, and we've consistently seen support there. So if for whatever reason we experience a level of uncertainty or an economic collapse in a different country like China, or maybe just the interest rate cut really isn't, maybe it's too big and it spooks markets and people start selling off into that. At the end of the day, I would like to see a break above these ranges right here, and I would argue right around there, or you can do a horizontal support and resistance. Yes, there is no one perfect way to look at this, but as you can see here, when we broke above this range right back in October of 2023, we saw a lot of wicks to the downside. So this is the next major range range to be, and that would be about 60 cents. If we can break above the 60-cent range right here, then it's highly likely we're going into that next range of about 75 cents. And at 75 cents right up here, you can see that we consistently sold off as well from the local highs of July of 2023. So that said, we have a few different scenarios. I know we have a lot of lines and I don't want to confuse you. If we see the market start to tumble a bit, I have a lot of buy orders set right at this range of like 45 to 42 cents, or for whatever reason, even 38 cents. If we get a black swan event, some insane new war pops up out of the Middle East, or maybe there's a terrorist attack, and I don't, God forbid anything like that happens, but things happen in the world. I could see markets selling off pretty hard and a potential wick as low as like 35 to 34 cents. And at that point in time, it'd likely be bought right back up to at least 38 cents. That said, if we do not see that and markets continue to rally, the first range to beat is going to be about 68 cents. The next range to beat would be about 74 cents. XRP has developed so much support and resistance in these ranges over such a long period of time. You can see it's going to be very difficult for it to move above these ranges, but when it does, it's going to be explosive, because on the upside, it's basically thin air. And I'll go ahead and pull up a new chart of XRP so you can truly see that. To the upside, there's virtually no volume traded at about $1.35 all the way to $3. So as we continue to break out to new highs after we've been in this multi-year, just very slow moving range, I think things are going to get very exciting. Right now is a great time to stack up, and I would say stacking up all the way down to a potential 34-cent range would be amazing. I don't know if we'll ever get there this time around. It might be possible that we dump to 45 cents one more time before moving to the upside, but at the stage we're at, I think the real risk is not accumulating enough XRP, which is why you should put that XRP that you're holding to work in the #1 play to earn XRP game, and in return you will earn crypto. It takes about 10 minutes per day. You can do that by going to the link in the description below, bullrunners.com. It's very straightforward. You do it in 3 simple steps. You get your XRP wallet, #1. 2, you get your game pieces. You play it for 10 minutes a day. And then 3, you earn that crypto. The crypto is directly convertible for XRP. We actually explain exactly how it all works in these very short, easy to follow videos. And all you have to do is subscribe. So you have nothing to lose, everything to gain. It's a great way to not only reduce volatility in the case that the markets collapse, or in this case, even sell off a little bit, but it's also a great way to compound or stack onto your XRP bag into the next major bull move through the end of the year. Again, at this channel, we've consistently stood by and have believed that as things are right now, even with all of the uncertainty, things are actually looking more and more bullish, because this is an accumulation zone. And consistently, XRP and Bitcoin has been not only bought by the droves, but removed from exchanges. So that is a good indicator that institutional investors are starting to load up into a major bull move through the end of the year. And one of the best ways that you can load up into the end of the year is go to bullrunners.com and play this game. Again, all you have to do is subscribe, check it out. You have nothing to lose, and I look forward to seeing you on the other side. So if you enjoyed the video, go ahead and subscribe to the channel, like the video, it helps us out. Go to bullrunners.com, and I look forward to seeing you in the next video, my friend. Goodbye.